Okay, so good morning, everybody. Welcome to our pre-market analysis on the S&P 500 futures market. We're going to be looking at um, we're going to be doing a pre-market here for everybody at the Day Trade Like a Pro community. Sorry, got a little hiccup there. And what we do is we start with our ultra high time frames, and that includes our quarterly, our monthly, and our weekly charts, and then we dial down from there to see if we get kind of agreement with what our higher time frames are saying. So let's go ahead and pull up our ultra high time frames here and go ahead and take a look at what the charts are saying. And for those that are already in the room, I'm probably going to go over some things what we've talked about in the recent past here, just because we have so many new people. So real quickly here, just to kind of sum up what we're seeing here on our quarterly chart, this is a 3-month chart. We have each bar is 3 months worth of price action, and this is kind of the highest time frame that I look at from this perspective. And what I'm noticing right now, just looking at my RVI and looking at the candlesticks, is that the market has no signs of exhaustion, and that means that it doesn't look like we're done with the current bullish push in the market, at least from this quarterly perspective. So our quarterly chart does not show any type of exhaustion from this divergence perspective that we look at. And if you look at the current bar, you can see that we have this huge wick to the downside. This bar will close in November, so we have time for this to continue to develop all of November, I believe, and then it will close, and then we'll have a new candle starting in December. So let me see here. Yeah, so end of November. So there's plenty of time for this candle to continue to develop. It could look completely different by the time it closes, but for the time being, what we see here is we got this huge wick to the downside, and if we look into the past, you can see that we have, anytime we have huge wicks to the downside here, at least for the last 10-12 years of price action, going back into the past, you can see that we then get a continuation to the upside. So all I'm saying is right now, if this chart was to close the way it looks right now, we would have no exhaustion in the current bullish push, and we do have a really nice large wick to the downside indicating a potential for continuation. In fact, this candle you see right here looks very much like what's going on over here. We have this kind of retracement of the previous quarterly bar there, and then this continuation to the upside. So we'll see if that ends up happening. I'm not saying that that's exactly what's going to happen, but that's what we're seeing right now. So let's go down to our monthly, and for those who are new, we went ahead and we drew the kind of a trend channel to the bottom end, and just looked at over the past 10, 11, 12 years, we looked at the slope of these bullish pushes in the market. And after that COVID sell-off, I think we coined it the COVID correction right here, we had pretty much the steepest slope in price action and got this push all the way until about September of this year, and we broke through that really steep slope. So just kind of interesting to note that we are getting this pullback. And on the monthly chart, we talked about this back in September. We talked about when this candle was in development. It didn't close, so just like we were talking about over here, what we were seeing was a push to a higher high in price, but we noticed that our indicator down here was pushing to a lower high. So you got this kind of divergence forming, and that was back when, again, we didn't have a closed candle, but we noticed that we were seeing this pattern, and we said if the candle ends up closing and we still have this downward sloping RVI but have the higher high, we would have an argument for bearish divergence. And sure enough, that's exactly what happened, and we did get a pullback as this was developing. So we noticed the bearish divergence back maybe at the beginning of September, and then sure enough, throughout the month, we sold off. Currently, right now, what I'm seeing here from a candlestick perspective is if we can continue to push and break the all-time high, which is 45.40 on this December contract now, it's not very far. Looks like somebody is calling me, so I can't answer that right now. But what I was saying here is this new candle here, if we could continue to push a little bit higher and break the all-time high at 45.40, we'd have a beautiful bullish engulfing candle right there, which is a great sign or clue for the bulls that we are going to continue higher. Now, from the divergent perspective, I think we've already gotten a bit of that correction there. Remember, we did sell off about 250 points, maybe even more than that, and now we're starting to kind of find that bullish, push back up. And there's no signs of really anything from a divergent perspective outside of that bearish case off of the all-time high. So we're going to have to watch. Ideally, the bulls will push through that all-time high, and again, we'll have a nice bullish engulfing on the monthly and a potential continuation higher there. So as you can see, quarterly, monthly, both looking very strong. And then when we get to our weekly, also looking very strong. And these are our ultra high time frames here. So everything's looking strong up top here. And back at the beginning of October, now I wasn't here for the first week of October, was on a little bit of a vacation. And when I came back, had I have been here, I would have talked about this back when this candle closed on October 1st. But we got a really nice bullish divergence off the low from the pullback from the all-time high. Somewhere, what was the actual number? 42.60. So back on October 1st, so going into the next week, which would have been, I'm guessing, October 4th, the morning of October 4th, we already had a bullish case to be made on the weekly chart. And as you can see, when we got that bullish case going into the next week, so the second week of October, I believe, if I have all the dates right, or the first official week of October, we just started pushing and got, let's see, the low was 42.70, the high we've got now over 4,500, so pretty much a 250 point push from the low. And we had that in the cards. So when we did our pre-market analysis back here, we already had that bullish case on the chart. And now you can see the follow through that has ensued in those following days and weeks. So from this weekly perspective, have really nice bullish divergence back on October 1st. And then the next candle after that carried through with the subsequent candle bullish divergence there. And again, we got this follow through. Now on the push right now, we don't have any signs of exhaustion in the push. So you can see that all three ultra high time frames look very strong with no signs of exhaustion. So let's go down to our shorter time frames and kind of take a look at what's going on. So first of all, you're going to notice we have this triangle on here. And this triangle we drew on the charts back, I believe, back right around October 12th, October 13th, right where you see me circling the cursor right now. And we actually talked about what's going on here on our daily chart in conjunction with what we saw with the weekly chart off the major lows down here, especially off that October 1st low. And building up this bullish case, we basically told our traders that there was a much bigger chance that we were going to break through this little triangle that we had here and push to the upside, because we didn't really have any argument that the market was going to continue to sell off. And so again, back on October 12th and October 13th, we already kind of forecasted that we were going to push through this trend line and continue to come up and test these previous highs up here. So you can see that that's what happened. For anybody who was in the trade room, they could definitely attest to the fact that on the morning of October 12th, we had a very strong bullish case off the pullback. And we'll talk about why we bounced over here and why it made sense from a few different perspectives. But we had that case going into the morning on the 12th. And then as you can see, the low that morning was around 43.20. And now here we are up pretty much 200 points from there. So on this daily coming into today, One thing that I'm noticing is there is an argument for some bearishness off the current high. So yesterday's high was, let's see what the actual value, 45.32 quarter. The all-time high was up here at 45.40, so we actually are not quite as high as that all-time high, but the RVI level has actually pushed up ever so slightly. So what I tell my traders, and if you spend some time with us, you'll understand, we have an argument for a little bit of bearishness right now, but because of the actual context in the market and because of what's going on, we still, have to keep in mind that this could be just an indication of a shallow pullback, and then we will get more continuation to the upside. So we do have that on there. Let's go down to our shorter time frames and start to get a picture as to what we might want to be doing this morning. Keep in mind that we're doing this kind of analysis because we want to see a number of time frames lining up and showing the same thing. So if my daily, my 4-hour, my 60-minute, my 30-minute, everything is saying the exact same thing, then more than likely that's going to have a little bit more weight than something that has no argument from the perspective we're looking at. So right now the daily looks very strong if you just kind of step back and look what's going on here, but I do see the beginnings of what could be a little bit of a bearish divergence right now. Again, keep it in mind the context of what's going on. So let's just kind of refine and maybe further explain what I mean by having a bearish pattern, but then still expecting a bullish push. So yesterday, we're down here now on our 4-hour chart. And so again, we actually had a trend channel coming down here, again, expecting to break that trend channel to the upside. I don't know why this one's on there. Breaking to the upside, and that's exactly what happened. And then back here, October 1st, remember we talked about the bullish daily candle and the bullish weekly. There's the bullish 4-hour. So again, if you would have looked at this from our perspective back on October 1st, you would have already had a strong bullish case, and had you have thrown a couple contracts on there long and just held, he would have been up again almost 300 points right now. Now, so I went on a little bit of a tangent just to talk about this bullish bearish situation. Yesterday, in fact, this morning looks very much like yesterday. So yesterday we came up, we got the bearish divergence on the 4-hour up at the highs from the day before yesterday. But then in the overnight session, got a bullish continuation pattern. So we did have a bearish divergence off the highs from the day before yesterday, but then yesterday's low going into the open, we got the continuation pattern. And so when you're in a strong bullish push like we are right now, you typically want to hang your hat more on pullbacks and the signals that you get on the pullbacks rather than the signals that are going against the strong momentum that you're seeing in the market. You do still want to keep in mind that that is sitting there and that could potentially follow through for a larger push. But sometimes, again, when you're in this type of strong bullish momentum, there's just no strength in that move. And so when you see these signals, you can see I marked one over here, I marked one right there, I marked one from yesterday's high, which is what we're coming into this morning. And on those pullbacks, you do get some type of move. It's just not as protracted as the opposite, right? As going with the trend. So coming into this morning, like I said, we have the same situation as we had yesterday. First of all, yesterday was actually a pretty narrow range compared to some of the other days. So if we go back to our daily and you look at the ranges of these bars, we're looking at, let me just see if I can get maybe an average just from visuals here. I mean, 50, 60, 70 point ranges are, and sometimes 80 point ranges all throughout the last few weeks. But look at yesterday's bar. I mean, we got maybe 20 or 30 points. So a much smaller range. So long-winded way of saying tight range compared to what's been happening for the last few weeks. But we do have the bearish case off the previous daily high, just like we saw from yesterday's market, and then we have the bullish case off the overnight low, again, just like what we were seeing when we did our pre-market analysis yesterday. Just FYI, yesterday we had a bullish bias going into the open despite the bearish case off the highs. And sure enough, we got a nice bullish push, albeit somewhat shallow. So this morning, we'll just go ahead and reiterate everything we've seen from the top down. Everything on the higher time frames looks strong. Really no signs of exhaustion until we get to the daily and the 4-hour, but keep in mind that we're going to see those type of signals in a strong bull push. So let's go down to our 60-minute just to see if we're getting agreement with what we're seeing here, and then we can start to wrap things up and get a picture of what we're going to want to do into the open here. So again, 60-minute bearish off the highs of yesterday. We got the pullback, and then we have agreement with the 4-hour off of the overnight low here, right at 45.10 quarter for that bullish side of things. Just keep in mind, again, we are in this tight chop, right? So let's go down to our intermediate time frames, see if we're getting agreement with everything else, and then we'll kind of put everything together here. Remember that I tell everyone this, the reason we're doing this kind of analysis is because we're looking for a strong confluence between all time frames to give us kind of conviction for where the market can go. Again, if you go all the way back to October 1st, that's when we got the stars aligning, and that's where we got this 300-point move up to the upside. And then all these other areas where you see major turns in the market, we also got confluence going in that direction as well. So let's go over to the 30-minute, actually I was on the 10-minute here, and just see if we're getting agreement. So again, got the agreement off the highs, but we also have the bullish continuation pattern off the lows. So again, we're in a battle here. Just like yesterday, we came into yesterday's market and we had the same situation. It's going to be a battle in this little range, and what we're seeing is from the higher time frame perspective, we can expect this to continue to push to higher highs, but we do not want to ignore the fact that a lot of our time frames are giving the bearish signal from the previous daily high here, this red line that you see on the chart. So unfortunately, it's one of those mornings where we have kind of two arguments going on. One argument to the downside has just as much weight as the argument to the upside. And again, it's not going to be like that every morning. In a picture perfect morning, we come in and everything is pointing to one direction or the other. Right now, the momentum is to the upside. Everything looks strong to the upside. The high time frames are telling us no exhaustion, so we should continue to push. But we need to keep in mind that from the 4-hour and even arguably that daily time frame down to the shorter time frames, we're getting that exhaustion pattern once again. So unfortunately, it's not a morning where I could tell you with a very strong confidence for one direction. Had it been, say, October 12th, if we came into the market on October 12th, I could have been very confident in telling you we're probably breaking to the upside. Same thing on October 1st. This morning, basically what we need to do is we need to break through the overnight or the previous daily high. So if the market can get through 32 quarter here, then basically all this bearish exhaustion that we're looking at will no longer be relevant. And so we can expect them to go ahead and continue to push higher. On the other side of things, we've got this 10 quarter sitting here where we got all the bullish arguments kind of telling us that we're going to have a continuation to the upside. We need to really, that is going to be kind of the first line in the sand there. So if the market can hold 10 quarter, then more than likely the bulls will win out and continue to push. And again, assuming they can get through 32 up top here, then it should be kind of smooth sailing from there. Keep in mind that we're right near the all-time high. So we've got a prediction point on the charts here at 45.40, 45.41. That is the all-time high. Also yesterday, it's kind of interesting to point out, we talked about two major areas of resistance on the push to the all-time high. The first area of resistance was right around 45, you know something? Now that I look back, I don't remember the first level. I believe it was 20, I don't remember now, but the second level we were looking for was 30 to 31 quarter, and the high of yesterday was 32 quarter. So we had two levels. Both of them ended up working out. I believe it was 24. So you can see here on the 30 minutes, harder to see, but we talked about somewhere around 24 being difficult. It did come up to it and pull back and then bounce and push through it, and then comes right up into our next expected area of resistance up there around 31. So just interesting to point out. So on this push up, we've already kind of outlined from yesterday's market where we expected resistance, and after this 31 area, there's nothing until the all-time high. So again, assuming we can get through the previous daily high at 32 quarter, then we could expect a test of the all-time high, because there's not much going on the charts. If we zoom back all the way back to when we were up here at the beginning of September, that's really something that we would expect to hold the market down. So from that, and not only that, from the prediction point perspective, if we go ahead and zoom back in here, if we get through the CP at 31.75, just a few ticks below the high from yesterday, then we have all this room all the way up to 41. So that's kind of where we are this morning. Like I said, I wish there was a very strong alignment like we do get on occasion for this morning, but we just don't have that case. What we have is kind of the conditions for the morning. Ideally hold 10 quarter, push to break above the 32 quarter, and come up and test the all-time high. From there, who knows what's going to happen next. We have really good levels to rely on here. We have prediction points. We have our eye levels, which is something that we do for our members in my trade room. So we have eye levels, prediction points, and our daily levels to kind of go with. And then we have our signals for trade. So this morning, had you have seen this pullback to 10 quarter, this pullback here, we've got bullish signals again on the around the 10 minute, the 30 minute, the 60 minute, and the 4 hour, all showing bullishness from this low over here. So ideally they'll hold and continue to push. If they come back down, that's going to be essentially going against what we expect to happen this morning. So we expect this push to come up and break through 32 quarter and test the all-time high. If that doesn't happen, we'll have to reevaluate. Like I said, there are great levels that we have below us to watch. There also are some key retracement levels for the current leg. So we have this push up from this most recent pullback back on October 18th, and then this nice kind of impulse up. And you can see that the 38, the 50, and the 61, look at where they're lining up. The 61 is exactly the CP. The 50% is essentially exactly the KP, and that swing high back here from the beginning, the glowback session going into the night of the 18th there, right at the 50%. And then our 38% of this leg is right at this little cluster of KPs. So I like the confluence we have from a retracement perspective on this leg if they are going to pull back. But that's where we're at this morning. We do kind of expect this bullish push to test the overnight high, get through it, and come up and test the all-time high. So there's a lot more to this. We're going to jump over to the private room with my members. We're going to get the eye levels on the chart. You can see some of them actually on there, that 21 quarter there. And we'll start to look for some good trade setups for the day. So thanks for being here, guys. I hope that helped you out. Hope to give you some kind of lines in the sand here going into the open, and kind of an idea of what we could expect here. And if what happens in the market isn't what we would expect from what the signals are saying, then we reevaluate. So remember that every second in the market, new data is coming in, and we have to be nimble as traders and kind of, what's the word for it? It was right there and it just left my head. But we have to be able to adapt to the market. And if the situation changes and the charts are starting to tell us something else, we're going to have to go ahead and change our hats and start looking at the opposite perspective. So I'll leave that with you guys. We just have a minute or two until the open, so I'll be jumping back to the other room. I hope everyone has a great rest of your week, and we will do this every Thursday morning. Who knows, maybe some of the mornings will come in and we'll get a really strong alignment like we got back at the beginning of October and at mid-October when we had that bullish case on October 12th, and we get the follow through. So have a great rest of your day, and we'll see you here next Thursday morning.